Some people still debate whether climate change is real. The market doesn't. It already moved on, and it's making money. Insurance companies are quietly erasing entire zip codes from their maps. Hedge funds are snapping up water rights like precious metals. Energy corporations are rebranding themselves as environmental heroes. And governments, they're no longer just fighting climate change. They're retrading Italiano. Because somewhere between public panic and official policy, a realization set in. This isn't only a crisis, it's an opportunity. $1 trillion one. Welcome to the Financial Historian, where money, power, and history collide, and nothing is ever as simple as it looks. For more than 200 years, the same force that built empires has also carried the seeds of their destruction. Energy, coal powered Britain's rise. Oil defined America's century. Every empire's wealth has been tied to what it burned, and every decline began when that fuel became scarce, expensive, or uncontrollable. So, when people say the climate crisis will reshape the global economy, that's not exaggeration. It already has. What es different now isn't. The crisis itself, it is that the crisis has become the product. Smoke, storms, and fear have been packaged into financial instruments. This story starts long before electric cars and solar panels. It begins in the 19th century, when the Industrial Revolution turned coal into currency. By the mid-1800s, Britain produced more coal than the rest of the world combined, powering factories, fleets, and colonies. Coal wasn't just fuel, it was imperial strategy. Every exported ton reinforced global dominance. Even then, the cost was visible. Scientists noticed industrial emissions altering the atmosphere. In 1896, a Swedish chemist calculated that burning coal could warm the planet, a warning largely ignored. For most of the 20th century, climate change wasn't treated as an environmental issue. It was treated as a profitable externality. Oil replaced coal as the new imperial engine. From early oil monopolies to cartel power in the 1970s, control over energy meant control over wealth, war, and policy. And by the late 1950s, fossil fuel companies themselves had run the numbers. Internal research predicted global warming with unsettling precision temperature rises of several degrees within a century if emissions continued. They weren't wrong, they just buried it. Fear is hard to sell when it threatens your product. But then the approach shifted. When governments finally responded in the 1990s, they didn't ban pollution. They priced it. The Kyoto Protocol wasn't just an environmental agreement. It was the birth of a global pollution market. Emissions became permissions. Carbon became tradable. Companies and countries received allowances to emit co-pollute less than your quota, and you could sell the difference. Pollute more. And you could buy your way out. Capitalism didn't pollution. It financialized it. We didn't stop emissions. We turned them into assets. Soon after, the world's largest carbon market was born. On paper, it looked elegant. In practice, it behaved like speculation. Companies faced a choice: spend money cutting emissions, or spend money buying credits. And many of those credits came from projects that promised carbon reductions elsewhere: forests, renewables, offsets. The problem, many of those projects didn't work. Some forests never existed. Some land was already protected. Some reductions were imaginary. The system didn't eliminate pollution. It created a loop where emissions became a line item and green became a narrative you could trade. Carbon markets turned salvation into speculation. Once carbon itself became financialized, everything attached to it followed. Renewable energy wasn't just technology, it was opportunity. By the 2010s, wind and solar were no longer fringe ideas. They were destinations for capital. Governments subsidized them. Investors flooded in, and when capital floods in, history repeats itself. A rush. This time, it wasn't prospectors. It was venture funds, tech executives, and green startups racing to dominate the next energy order. One electric car company became the symbol of the transition, valued higher than entire legacy auto industries combined, not because it sold more vehicles, but because it sold belief. Behind the optimism came extraction. Lithium, cobalt, nickel, The metals powering batteries, a new clean energy empire built on old patterns. Mining expanded. Labor suffered. Nations competed for what were now called critical resources. The environmental revolution quietly reproduced the same inequalities it promised to escape, and one country positioned itself perfectly. China didn't just participate, it consolidated. It came to dominate rare earth production and refining, quietly controlling the backbone of green technology. While other nations talked about transition, China built the supply chains. Oil once powered American influence. Minerals now power China's. Different fuel. Same logic. At the same time, finance found opportunity not just in prevention, but in catastrophe. Insurance companies adapted premiums, rose, coverage retreated, and new products emerged. Catastrophe bonds, these instruments allow investors to earn returns unless disaster strikes, in which case their capital absorbs the loss. Risk moved from insurers to markets. Disasters became investable, and as climate volatility increased, so did demand. By the early 2020s, catastrophe bonds attracted major institutional money, not because investors wanted destruction, but because volatility paid. Every flood, fire, and drought became more than a tragedy. It became a balance sheet event. Finance then needed redemption. After systemic failure years earlier, it found a new moral language. ESG. Environmental, social, governance. Invest with values. Align profit with conscience. The idea was simple. The execution wasn't. Trillions flowed into ESG-labeled funds, but standards were loose. Definitions blurred. Companies with massive emissions still qualified. Promises replaced outcomes. Offsets replaced reductions. Ratings agencies sold virtue scores like subscriptions. Ethics became branding. Governments followed. Green stimulus became the engine of modern industrial policy. Subsidies shaped markets. Corporations adapted strategies around incentives. The winners weren't the smallest innovators. They were the largest incumbents with the best access. Climate policy became economic leverage. Carbon tariffs protected domestic industry. Supply chains shifted, and once again, power flowed not through conquest, but dependency. Through it all, the same principle remained. Control scarcity. Control the system. The climate crisis created a new scarcity, not just of energy, but of stability. And markets priced it fast. Insurance retreated. Banks adjusted risk. Agriculture funds bet on drought. Water, land, elevation, all quietly repriced. Some investors call it climate alpha, profit extracted from forecasting collapse. For centuries, nature was collateral for growth. Now, its breakdown is collateral too. This isn't new. Fear has always fueled markets. Cold wars expanded defense industries. Terror expanded surveillance. Today, climate expands risk finance. The market doesn't need the problem solved. It just needs it managed and profitable. Real progress exists. Technology improves. Costs fall. Innovation happens. But once capital enters, purity disappears. Offsets become illusions. Forgiveness becomes a commodity. Faith becomes infrastructure. Carbon markets thrive on belief, not belief in nature. Belief in the system. And capitalism never wastes a crisis. It adapts, repackages, and resells solutions, often back to those who caused the problem. That's not conspiracy. It's design. When the planet burns, the wealthy don't panic. They reposition bunkers, farmland, water, resilience products. Survival becomes premium. For everyone else, climate costs shows up as higher insurance, higher food prices, unstable power, and shrinking options. This economy doesn't separate winners from losers. It separates those who can adapt from those who can't. Crises don't invent greed. They reveal it. So when someone says they don't believe in climate change, belief is irrelevant. Capital already voted. Every sector priced it in. The future is already discounted. History doesn't repeat it. Empires once traded spices, tea, and oil. Now the world trades survival itself. Because climate change isn't just the defining crisis of this century. It's the defining asset class, and nothing sells faster than protection from collapse. If this gave you a new perspective, hit subscribe. History has the answers. I'll show you where to look.